Today is Tuesday, March 22nd. I want to look at the bond market today in light of what happened in Brussels overnight. The markets, of course, react in market ways and say risk off. And certain assets move one way versus the other. Anyway, let's take a look at the junk bonds. This is the junk JNK ETF, high yield bonds. And you can see nice rally from the bottom in February down in there with the stock market and kind of moving in tandem with stocks. They hadn't been beforehand, but this is something I like to look at just to get an idea of what's going on in the stock market, to see what the bonds say about things. And you can see that that was kind of an encouraging short-term move, a breakout. But is it a breakout, or is it just a momentum-based move through this trend line, which doesn't even go back that far? But you can only take what you have on the chart, and that looks okay. So let's get rid of this. We'll look at other areas. Let's look at higher quality bonds via the LQD ETF. Well, that's a serious trend line breakout. If you draw it from here or from here, it doesn't matter. This is more of a serious breakout with a move, a test, and up we go. So is it risk on? Is it the search for yield is back, and people looking for corporate bonds, not necessarily junk, but something better than maybe what they're getting elsewhere? Well, I want to look at something else here. I want to take a look at the junk bond market versus the high-grade corporate. So what I have up here is the JNK and then a full colon LQD. So that's how you get a ratio here in Technician. And we'll hit enter. And just because it is a ratio and not actual trading, I'm going to turn this into a line chart, make it a little clearer. So if you're just looking at corporate bonds, not default-free treasuries, it doesn't look very much different than the junk itself. And we can put a trend line on that. Now this, I would say, has not broken out. So with all the excitement over risk on since February or early March, depending on which market you're looking at, with all the excitement about risk on, this really isn't it. It hasn't broken out yet. And of course it could. A nice triangle under the trend line kind of leans bullish, but it's not a buy signal until it breaks. So the trend here is still down in terms of desire to take risk in the bond market. You can see that if we go further back in time. Actually, I'm going to put this in weekly so we can see even more data. Well, that's 2008, so that's a kind of unusual time. I'm going to get rid of that. So you can see the trend here is still down. Plenty of room for a move to, retracement to the mean, however you want to call it, reversion to the mean. But still, the trend is down here, and I don't think this is a risk-on scenario, at least not in the big picture. Okay, back into daily time frame. So, what is the bond market telling me? That whatever we've seen over the last couple of weeks is still corrective in nature. I know the stock market this morning is holding up fairly well given the news in Europe, but it's been a long, nice rally. Unfortunately, I was not part of it. I didn't think it would happen quite that much, but I just don't see it right here until this breaks out, until a lot of other things happen. I don't see it continuing higher to new highs in the stock market. So listening to the bond market, not that encouraged. So you take that for what it's worth and add that to your arsenal of analysis.